Per usual, everything on this channel is for educational purposes only, is not intended as financial advice. I hope everyone had a great Labor Day weekend. Let's take a look at some charts here for Setup Sunday and Macro Monday, a little bit of a monster mash, starting with the monthly BTC ETF flows. Nothing too super special here about August net negative on the flows. That's okay. It would be worrisome if price was way down and flows were way up. If we had a record flow or something, then I'd be more concerned. Positive months look like 5 billion. Negative months look like about what we've got. It just is what it is. I had a lot of people fighting me about seasonality in August and September. Look, I don't really care what the numbers are. I don't make them up myself. Don't take it personally what I'm going to say in this video. It just is what it is. It's just what we've seen. What we've seen is a weaker August, September, and a very strong October. That's why September is my favorite month. It sets us up for Q4 by being somewhat mediocre in Q3 as a whole. ETH, a little bit of a different story so far. Flows 4 billion in. Now they've had some catching up to do, admittedly, relative to when this started since inception. Hasn't really seen much of anything until past couple months. And we'll see what July looks like. September looks like. July record flows down from July so far, but for any ETF, 4 billion in a month is a lot. Now this is a string of ETFs, not just one, but for an asset class. Very, very good sign for uptick in the narrative, strategy, passive flows, et cetera, et cetera, et cetera. You don't get flows like this unless there is a belief in the asset a longer term. Now, sure, some of this is tourist, some of this is trading, some of this will come out just as fast as it came in, but a lot of these flows tend to be stickier over time. So it's good for ETH. And for BTC currently, on a relative basis, ETH BTC, we do have a miner and or old Chinese whale selling. I actually don't think it's a miner. We don't know much about this entity, this person. They're selling and executing poorly, swapping BTC to ETH and then staking, whether or not they're on some sort of clock, whether or not these are ill-gotten gains, whether or not these are gains that would otherwise be forfeited. Who knows, right? It just is what it is. This is what's happening, and this is what's going on with price. BTC is down a decent amount since this individual started. ETH basically flat. But, this lines up with what we had been saying for August and September. So it just is what it is. It's what are you going to do? It's if someone wants to sell $1 billion on a Sunday on Labor Day weekend, they can. What's getting interesting here, everyone's thinking, is this 4-year cycle? Is it over? Are we going to get more? Are we going to get less? What's going on with the global liquidity? What's going on with flows? All this other stuff, yada, 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 yada. Right? Okay. So when we have the past, we can look to the past. That's all we have. To say that the 4-year cycle will be over. So let's take this 1 month at a time, 30 days at a time. Let's see what we can see. Relative to the other cycles, we are getting close. We are within 30, 40, 50 days of what we've seen historically for a rally in a bull market period. So if by day 1100, if we're still making highs, then I think it's pretty safe to say the 4-year cycle may at the very least get extended into 2026. If by day 1060, we put in a pretty solid high, pretty solid euphoric high, we can say, well, that's what we've seen historically. Again, this is just like seasonality. It is what it is. Don't be offended by it. Use it or don't use it. I don't care. Nobody cares what you do with your money. It's up to you, right? I'm just an analyst here. I'm just a guy with a YouTube channel. August negative despite being a post-halving year. Fine. So what's September going to be? I expect it to just be mediocre. I don't expect much of anything. I'll talk about what to look for. For me personally, on the trading side, numbers-wise, but just going into it, the expectation is probably nothing. Probably close to flat, maybe down. That's that. Just is what it is. Why? Because October tends to be just craziness. 10% minimum. Sky's the limit for Q4. That's just what we've seen. So the goal here is to survive. Whether that's trading something else, whether that's sitting in cash, whether that's not carrying, that's completely up to you. Looking at global liquidity, we get some very interesting things happening here. It's a very good sign to see gold breaking out. Now, gold and Bitcoin rarely move together, if ever. So to see gold moving up is another reason to expect a mediocre September for BTC. BTC and gold actually moving in opposite directions here. Global liquidity in the green, back at highs. Looking at the past 3 times we have topped, 2021, 2017, 2013. We have not had a higher high in gold. when we had a higher high in crypto prices. We had a brief retest in 2022, but we did not have the gold here. Silver line, gray line, did not have a meaningful higher high when crypto had highs. I mean, gold here, for all these people cheering gold on, gold did nothing for 7-8 years. So, right, you do need to be somewhat active on the gold side if you want to make money. There are times when gold works and there are times when gold does nothing. Gold did terrible in 2016 and 2017 relative to BTC. It's doing a little better today. But the good news here is if we see continuation in global liquidity, the green line, if we see continuation in gold, that should mean, again, the 4-year cycle is either extended or negated, nullified entirely, and we should eventually see highs in BTC. Obviously, we'll need to see confirmation of that. But again, this is what do we expect? How do you want to position in front of this as things are playing out? So to me, it's a very, very good sign. We'll get to the gold chart isolated, that gold is breaking out. Now for BTC, it's a different story. It is neutral. It is bearish. There's no bones about it. Last week, we broke down on a Williams fractal. I don't have that on this chart. That's one of the main reasons why I'm out of most of my crypto, or was well before this broke down. We talked about an Adam and Eve inverted fractal last Sunday. We talked about going into the cloud, talked about bearish TK cross. So all of this is coming to fruition. We have a bearish 1050 cross. There's nothing here that's bullish, and that excites me to no end because it makes the next trade very, very simple. I'm not here to trade Bitcoin from 108 to 114. I don't care. Let it bounce, let it die. Doesn't matter. I'm here to trade Bitcoin from 116 to 140, 150. Also notice again, the yearly pivot. Shout out to the yearly pivot bros. That has held so far. So the first step is to get above the cloud. That may take a month. That may take 60 days. That may not happen this cycle. I don't know. But if it does happen, I will be there. I will be ready. From a trading perspective, to be long. So that's the mindset. The mindset is do nothing, expect whatever. Who cares, right? Now we could buy cloud levels on the way down. You could say, well, it's going to go from here to here. It's an edge to edge. Maybe I short it. Maybe I don't. Maybe we get some extension here. Maybe we don't. I don't think if we live below 100K, it's going to look too pretty on expectations for cycle continuation. If we spend another 30 to 40 days sideways, it's going to be tough. If we have another 30, 40, 50% drawdown, right? It's going to be tough to say, all right, the cycle's still going, guys, hang in there. So that's what we have to fight off. We have to fight off extreme downside. The cycle can tolerate flat, boring chop, so long as liquidity's on our side, which it is, gold's on our side to confirm that. And the next step would be price at least creeping towards 116 or higher. Now that could happen in a day. I don't know, right? If we get 116 tomorrow, I have just some decisions to make. But realistically, the trade isn't really until like 120, 122 for confirmation. And that is a long ways away from here. Either that or price back above the cloud sometime throughout September, probably into October, just like we had in April. It took a long time for this stuff to bottom. It took a full quarter to bottom. Do we have a full quarter left in us for this cycle? I don't know, right? Some people say yes, some people say no. Let's see. Let's see if we can get it. But I'm still expecting a bullish October. That doesn't mean I'm pre-positioning for that now. It means towards the end of September, I think it makes a lot more sense to think about positions. Here's just wait and see. Looking at the backtested AI cloud 15, 37, 40, 18. This was only backtested on the daily, only on BTC. We're also breaking below the cloud here. This is noisier. It's messier. But again, confirms we're not bullish. I don't know who needs to hear that, but that's okay. We're not bullish. Looking at positioning on the COT data, this is neutral. It's not bearish, but it's neutral. It's not bullish. Not as bullish as it was in July. Certainly not as bullish as it was in May and June. What you always want to see is commercials max. I don't care who commercials are. I don't care what they're doing. I don't care what you think they're doing. I'm looking at backtesting of this indicator. Commercials max long, large speculators, and max net short is what you want to see. Ideally, as confirmation. We don't need to see it first, but it makes sense that in April you had a flip of the COT data of positioning. Just something else to watch for throughout September. Here's the Adam and Eve target, 105 to 102. We could see a divergence on that. We could see a divergence at 100, right? Those are all things to talk about down the road. But to me here, nothing is screaming, hey, long this chart. This looks really good. Buy this dip. I'm not seeing that. Even if this is the stone cold low, it's not for me. I can't be confident in what I'm seeing to the long side. Now, what we may see is, again, into October, maybe in my dreams, we get this beautiful inverted head and shoulders into October. Will we get that? I have no idea. But I'll tell you, if we are anywhere near 119 in October, I'm in. I'm full account, as much leverage as tolerable at that level. Here is a question mark, an uncertainty, a who knows, who cares, sideways chop, 0. That's my positioning on BTC here. Just doesn't make sense. And over the past 4 years, this is probably the least amount of crypto I've had in my trading wallet. Most of my funds currently, just to be transparent, are on the gold side, because we'll get to that, how good gold looks. And looking at MSTR, this is not where you want to be. Again, are you here to trade MSTR from 340 to 380, 340 to 420? Or are you here to trade MSTR from 380 to 680? That's what I'm here for. If the inclusion, exclusion, S&P rumor, yada yada was true, this would look a lot better. Maybe this has a God candle. Good for you if you caught it coming up here this week. Nothing, again, to me says go long MSTR here. I just don't care. It is not where you want to be. And it's been sideways since November. Really done nothing. Failed breakout. Just is what it is. And if you're curious on IBIT, we also have a bearish DK cross here coming up. And that edge to edge points to 56. So as far as a level to watch on IBIT, I don't hate 56. Just as a random set it and forget it bid zone going through September here. Now ETH on the COT data specifically on the bottom here is the opposite of bullish. It is the max bearish. Commercials, who are usually correct, are net short. I don't care what they're doing. I don't care if they're staking. I don't care who they are. Does not matter. That is not the discussion at hand. Looking at not just the crypto data set, but all data sets for COT data, this is bearish positioning. This is the definition of bearish positioning. Commercial short, large spec long, retail long. It will likely then be very hard for this to go up, but not impossible. It will be hard for this to go up. This will be a headwind positioning wise. The backtested BTC Cloud AI, etc. Not bearish. It's not rolling over, but sub 4K and things get interesting on this as well. On the normal cloud, we're below the Tenkin. We're about to lose another fractal here. We lost a fractal the other day, mid-August. Just know where I want to be for ETH. I don't care who's buying. I don't care who's pre-announced buys. I don't care how many digital asset treasury companies there are. This is not a technical setup I like. This is not a positioning based on COT that you like. And it's certainly nothing you'd want to see on the validators. Again, I don't care what these people are doing. I don't care if they're switching validators from one to the other. I don't care if it's OG sellers. I don't care if it's Mimo and Peepaw unstaking. Doesn't matter. You don't want to see this setup in the validator queue with the exit being pretty substantial. And yes, we have some of that coming back in. And yes, this will be cleared probably in 18 days, which, hey, we'll be through September by a good chunk at that point. And we'll be closer to some clarity probably on price action. This is a good metric. Even if you hate technicals, just see what the validators are doing. Who's selling, who's buying, based on what we see with the entry and execute. Another thing I'll say here in ETHBTC, this TK C-clamp starting to look even more dramatic, losing the Tenkin there. You also have a bear div on RSI. This has been a great trade. It's been an excellent trade. And people tend to start to get carried away up here because they either missed it or caught it late or they're trapped. And it does feel a little crowded. Based on positioning, based on how that looks. For Solana, do I even have a chart for Sol? I do, but Solana, if you're the global casino and you're not seeing a lot of activity on the DEX side, not great. Maybe because most of that's gone to Hyperliquid now, but not seeing a lot of DEX activity on Sol. I wouldn't expect Sol to magically do super, super well. It's been a choppy ride since July. It's wanted to break out and pull back every single time. The issue here is you have the breakout, but I don't have the confidence to say, again, if I'm putting a stack of dollars into this, I don't have the confidence that this is going to continue or continue at a speed that's reasonable. I didn't look at the Sol gold chart, but that's a good comparison to look at. Either way, and this should eventually reach 4 all-time highs, but I think you potentially get a better entry closer to October. That would be my read. I don't know why some of these other charts, Flow is one, Matic is another. I don't know why they look better than the others, better than the other laggards. They're starting to try to break out. The issue is if BTC breaks down, if ETH breaks down, I wouldn't expect things down the risk spectrum, down the market cap stack to randomly go in the opposite direction. If BTC can maintain sideways, if ETH can pull back not too much, then alts down the stack can start to do well. I'd focus on anything that looks like it's trying to break out. The problem is most of these charts, unlike Flow, unlike Matic, are at the equivalent of 20 cents on Matic, or they're breaking lows. That is not what you want to see. You never want to see any lower lows during consolidation if you've formed a base like this. So I don't even think these are today trades, but on the watch list, starting to look very interesting as they're holding some levels. But for the crypto side, there's really, to me, not much to do. And we're going to do a little flashbang here, so pre-warning. But if we shift gears to the macro side, this week it's all about jobs data. Labor Day Monday, obviously. We have JOLTS, we have ADP, we have unemployment at the end of the week. I wouldn't expect these Fed numbers to shift significantly above or below 90% unless the data gets much better or much worse. But usually at this point, we're pretty close to the meeting. We're within 30 days of the meeting. This cut has been fairly baked in. You could also do some game theory here and say, okay, if we decide on no cut, is my book ready for that? Is my portfolio able to withstand that? If I'm leveraged meme coins, maybe no cut would absolutely devastate my portfolio, and maybe I want to reduce, if you think that's the case. I think we're in the one cut camp at the very least, regardless of what we get on the data. Trueflation has been kind of all over the place, super, super volatile here, but it has hovered in and around 2%. We'll take it. The last print was 2.7 on CPI. Next print is 2.84 expected for August, with core creeping up, PCE creeping up. Not headed in the right direction. A lot of the hawks are saying, whoa, what are we doing cutting? We should be potentially hiking here. We're not restrictive enough. Fed focused on the jobs data more than the inflation data, based on the Jay Powell, Jackson Hole speech. But that could change, that could shift. If we start busting inflation numbers higher, that could put some cold water on Jay Powell cuts. I think we get cuts eventually either way when Trump packs the Fed. But if Jay Powell is at the helm, we may not see cuts past September if inflation gets too hot. Looking at GDP, this is not a recessionary GDP. I don't know who needs to hear that, but at 3.5, we are cooking here. They get once again on GDP. We do have some interesting stuff as well coming up with funding the government, TGA, liquidity in the pipes, that sort of thing. Reverse repo back up to 78 billion. It's maybe an end of the month window dressing thing. We'll see what happens for the rest of the week. Interestingly, we did have a credit union fail, very small, tens of millions in custody, but it's stuff like that where you start to see cracks around the seams, things start to happen. We've kind of had a failure on credit union or bank like once a month so far over the past couple of months. Nothing too crazy, but if we start to get headlines on Fridays where all of a sudden 2, 3, 4, 5 institutions are failing at once, then we're getting closer to some sort of intervention. So we're still pretty far away from that. On the chart side, it looks a little, if you look up top here, it looks a little obnoxious, right? I got a lot of charts, but really a lot of these are just expressions of the gold trade. Looking at DXY, it doesn't look like it's in a hurry to break 99, which is good for BTC. It's probably good for gold, probably good for equities as well. If anything, you could argue probably head and shoulders down here. Failed falling wedge, failed edge-to-edge trade. You get a bearish TK cross in this, and it is also harder to be bearish BTC if the dollar breaks down from here. If we see a new low on the dollar, I would expect BTC to have a harder time breaking down, because that means people are going to be looking for other assets to roll into. If we're cutting into an inflation environment, gold should do really well. Hard assets, fixed assets in general, fixed supply assets should do very, very well. And BTC is obviously in that camp. But for the moment, it is gold. This is XAU on the cloud. A bullish ticket across a few days ago now. We've had a series of green candles. This is definition of an ascending triangle breakout. The target is the target. It really, for me this month is not about making a ton of money. It's just not losing a ton of money into October. It's a bonus if you can do well in September, trade something else that isn't crypto. Don't force your hands into a bunch of places that don't make sense, and just fish where the fish are. Now, a lot of people talking about gold more and more over the past couple days because it's broken out, but we have been talking about gold setting up for quite some time on this channel, and it looks good. Sometimes these work out, sometimes they don't. The idea is to make more money on the ones that work out than don't. That's how you are profitable. So this looks great for continuation. GLD hasn't opened yet, but that's going to likely make a new high tomorrow. That looks great for continuation. This is the chart pattern target. The trend target can be whatever it wants to be, but either way, this looks excellent for continuation. And a lot of people, of course, asking me, what about XYZ gold, silver, platinum, copper, right? What about any of those things? You know, I would say, look, commodities as a slice are very, very bullish looking on the charts across the board. However you want to express that idea, if you want some leverage, if you want to go way down the risk curve, that's up to you. If you want to do leverage lithium, that might exist, I don't know, go for it, right? We're clearly at a time where gold and the alts, air quotes, precious metals, industrial metals, all looking very good here. So this is UGL. You can see the vol drag pulling this down on these successive highs. Still looks very good for bullish continuation. 3x gold, SHNY, also looks very good. I would almost not even chart these. I would just chart GLD. And you know, once GLD starts to hit targets or pulls back or hits a fractal, then I would pull the leverage back. But in either case, all these look very good. 2x, 3x. I think it's, for me personally, a little late for GDX. We had talked about this in 2024, and it kind of just kept going. It's up 86% this year. I didn't trade this at all. It just wasn't on my radar, but feels a little late for GDX. But if gold keeps going, I can't imagine GDX would stop or turn around. We've got junior gold miners. Looks great. A little bit parabolic there. You know, you've got this is leveraged miners, 2x parabolic. You've got JNUG, junior gold miners, 2x, also parabolic. So it just depends how far down you want to go. Do you want to go into uranium miners? URNM. This looks great. This is a mega inverted head and shoulders. This looks excellent on the cloud chart pattern. Uranium also decently hot right now. Looks ready for a continuation journey. Some people really like silver. Again, up to you. However you want to play it. I like gold. I like leverage gold. Fine. That's good enough for me. You know, I don't need to get super, super crazy. You got platinum and palladium. Pulled back, maybe holding some levels. Sure. You know, if the entire stack's bullish, why not? We have rare earths, REMX. We've been talking about this for 3 or 4 weeks now. My position's up, I don't know, 32%, something like that from the entry. Looks good. Looks great. You know, whatever you want to do. Copper? Sure. Why not? Copper's about to make highs. Go for it, right? Really depends on how deep you want to go. I don't love energy here. I don't love oil here. So I'd be careful with those super, super broad commodity indices because they tend to have a very heavy weighting in oil and energy. XLE here looks okay. I've been burned several times on XLE in 24, so I'm just going to sit this one out. But I don't hate it from a cloud perspective, from a potential pattern perspective, inverted head and shoulders-ish here on lower time frames. Looks okay. Looks okay. Problematic for our inflation story, and we certainly don't want to see oil busting 70, 80, you know, any of that stuff. And it's going to be harder to get cuts with Powell at the helm because our inflation numbers are going to start creeping up. So precious metals seems to me a better trade. Now, if we look at equities, the SPY, the Qs, you know, SPY doesn't look as rollover to me as the Qs do, but this is not a longable chart to me. This is a potential head and shoulders. I don't care what happens up or down. I can never see this on any chart and say, yeah, that looks like a great long here. You know, it just doesn't make sense. You've also got the potential edge to edge here, which who knows if we see it. I doubt it. But hey, sure, why not? 562 to 494. We could see that. We could see that start with a head and shoulders garden variety breakdown. But the Qs to me here today are not longable. You'd have to see prices above 580, above 590. This doesn't have to do anything, and I don't have to trade it either, right? It doesn't look like anything I'd ever traded to the long side. SMH also looks abysmal, whether this is a multi-shouldered head and shoulders or not. Again, what is this here? It's just not for me. NVIDIA, same deal. Earnings, no earnings, expectations, I don't care. I can't see this and think, yeah, this looks like a great setup. Until it makes the high and negates the possibility, it's not for me. This doesn't need to go to 159. It doesn't need to go to 134. But if it starts to break down, those are some trades to potentially think about. If this, then that in the decision tree, it just doesn't make sense as a long here. If we contrast that with Amazon in the Mag 7, we may have a very slow moving inverted head and shoulders here. A multi-month inverted head and shoulders, anything above 236 is probably go time as a potential trade. Tesla has had some better days. It is broke out, rolled over. It kind of reminds me of Solana. You know, it's just been challenging up here. I think the less Musk tweets about politics, the better. And this chart has a better chance of playing out. so long as Musk stops tweeting about the American Party or whatever. But I haven't lost hope on this one just yet. Anything below 320, and then I think it's fair to call it. But for now, it still looks okay. And if you like a little small dose, just a small dose of communism, CQQQ, that's what the C stands for, by the way. Many people don't know that. The communism QQQ, Chinese tech ETF, is the opposite of SMH. It's the opposite of the Qs. It's the opposite of NVIDIA. It's the opposite of what most of the high flyers look like here. This is a multi-year inverted head and shoulders breaking up a new multi-year high. And this is before the open, which BABA, I think, is up 15 or 20% over the past day. So this is going to open even higher, I think, tomorrow. So plenty of room on that. Plenty of room on KWeb. Add highs looks great. So there's always a trade somewhere. There's always something to do. You just have to look around a little bit or just sit in cash. That's fine. But I wouldn't force crypto trades here. RSP also looks good if you like equal weighted. S&P and financials also look very good. So there's a lot of patterns here that are maybe not your run-of-the-mill risk on style, crypto trader, 1000x leverage euphoria. But that's not what September's about for me. It's just, can we just make it through? Let's just make it through the next couple weeks here. See if we can come out in one piece, extend this cycle a little bit longer, and get another good quarter out of price action here. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.